Thank you, Dickie here, and I wanted to discuss the Israel conflict that I've been getting some questions on from my clients. And here's a video that kind of wraps up a few things for us.
Caution to the conflict in Israel, but that incoming macro data, very busy week this week, that will take center stage for markets as we move through the week, according to Fundstrat global advisors Tom Lee, who joins us now. Tom, thanks for being here. Why do you believe that it's really the macro data that the market will focus on? And why do you think that the markets have had somewhat of a muted impact this morning to the conflict abroad?
Uh, it's a great question. I mean, I guess the way I'd look at it is the stock market reaction is telling us that they are viewing the conflict as ultimately limited in time and scope. If there was a bigger sell off, I'd actually think the market was really smelling something much more dangerous and engulfing. I know people are focused on oil and the fact that the bond markets are closed, but we can see what interest rates are likely to do tomorrow by looking at ETFs like TLT, and it looks like interest rates are falling. I mean, I think that's a more singular impact on stocks anyways.
What do you think the ultimate impact of that would be? You said interest rates should decline sharply when the bond market reopens on kind of this risk-off sentiment, breaking the higher for longer fever that's existed for a while now. If that does happen, how much support do you think it actually does provide for stocks?
I think it's going to be quite substantial because, if we look at investors, they're looking at an economy that's been stressed and then now under increasing stress because long-term interest rates have really pushed up. I think we're seeing Fed governors starting to pushback's not the word, but start to realize that if it's term premia that's rising, that's acting as a huge drag on the economy. Well, now we have a conflict that could undermine consumer confidence. And so as a result, I think it's now changing the calculus. And I think the FOMC and the Fed are more likely to pause. I mean, to me, that's probably my big takeaway. And I think that takes away a downside case for equities. And it also makes it harder for interest rates to keep pushing higher, which of course is something that could break the economy.
That was Logan's point this morning, Tom, all about term premium, and she's been known as being relatively hawkish. Couple that with the volume on TLT last week. Are you willing to make a call that rates have peaked?
Uh, Carl, I'd love to be able to say that. I think bond markets are really tough to call, but yeah, I mean, it looks like if you aren't seeing rates push up higher today, which means TLT's down, well, we might be running out of reasons for interest rates to keep going up. And as Walter Deemer says, when a parabolic move like this reverses, it's not taking the escalator; it's going to come down sharply.
But Tom, what about the oil impact here? In previous crises in the Middle East, we've seen oil skyrocket. Obviously, the dynamic is different today than historically. We can't make a direct analysis there, but are you concerned at all about the potential for oil to go above $100 a barrel and the implications therein for inflation to resurge?
Uh, Oil should have been up a lot more today if the market was worried about disruption from production. I think oil really weakened it. We've had supply cuts all year, and oil's been weakening because we know demand's quite weak. I don't think demand is necessarily picking up. And, at the end of the day, I do think if it was going to make its move, it should have made a bigger move today. But again, interest rates in oil are very hard to predict, but to me, it's quite a muted move in oil.
Okay, so I'm not really big on normally watching an entire video and then making comments on it, but I like what Tom was talking about here, and I think he's got it right. If the biggest issue with all of this is whether or not the stock market or anything, everyone else thinks that this is going to be contained to just the conflict with Israel. If it ends up escalating, becomes a bigger issue, then we have bigger problems. But at the moment, what we can see from the market, which at the time when he was talking, it was down, but now it's the end of the day and the market's come back. So what we can glean from this, again, on a one-day basis, which I highly recommend never looking at anything on an individual singular basis, is that the market at the moment is not all that concerned about the long-term issues with this. Is there a short-term blip with a little bit of gas where we think there might be a problem? And that's going to be the short-term volatility of this. Are there going to be some sector issues where there might be some volatility and we might have some potential downside risk? I mean, you saw what he had up there with Carnival and the airlines. They're down a little bit, whereas Northrop Grumman's up. Again, are these going to be long-term plays? Unless this escalates into something larger and a bigger war, I don't see it being a major impact on any one of those. Same thing on the global markets. Again, is this a one-time or very short-term issue? Potentially, same thing with oil prices. If we really thought this was going to be a problem, oil prices would have gone through the roof. Now, that doesn't mean that over the next several days and weeks, as this unfolds, that it doesn't become a bigger issue. And if it does become a bigger issue, we have more people involved in it, and it becomes an escalation, then yeah, this could really affect other things. There's typically in these types of issues is not long-term effects, again, unless there's escalation. Now, there's some psychological things where people look at this and they're a little bit scared and concerned. Generally speaking, I don't see it being a problem. What's nice about this, and Tom didn't talk about this, but in my opinion, I think you're going to continue to see the market really focus on what's going on in the U.S. markets. And again, unless something changes. And what I mean by changing, if oil continues to go up because there's an escalation, then it might affect interest rates. It might affect inflation because it might become more invasive and pervasive throughout the entire situation. If that doesn't happen, I see the market doing exactly what Tom is talking about. They're going to look at this, as the Fed chairs have already started saying, that, hey, we already think we're at a position where we're restrictive enough. We don't have to go any higher. If interest rates continue to stay where they're at, bond yields stay within a reasonable range. It doesn't mean they have to stay where they're at. They can come down a little bit, but still they're significantly higher than they were 2 months ago. So if they continue to stay up there, that's going to be an issue. And having this issue hanging over our heads is going to continue to push on the market. But I think the market's really going to focus on what's actually going on. What does CPI come out this week? How do bond yields deal with this? How do treasury yields come out of this? If CPI continues to go down, we see treasury yields level off, maybe come down a little bit. We see oil prices level off and either come down or stay the same. If we start seeing some of this stuff level off, we start seeing inflation continue to come down. It's exactly what the Fed needs to happen. And again, they always say things, the Fed's going to do until something breaks. That's true, but it doesn't have to break. It just has to have something that's going to take over from them. And normally when something breaks, that ends up being the item that takes over for them. In this particular case, it might be that we have, one of the things that harmed the situation was the Ukraine situation, which had Russia and oil, and it became an escalation and became a global problem. Currently, with just Israel and Hamas, that's not a global problem. It's isolated in that area, so it's not affecting larger issues. So taking that into consideration, barring it escalating and becoming an issue where it does affect natural gas, oil prices, other issues as far as transportation, unless we see those problems come down the road and become a bigger issue, I don't see it becoming a problem for us. That being said, if we come out here on Thursday and the CPI is all screwed up and it's not going in the right direction, that can change things too. So we look at these things and we try to have an answer for today. And we try to have an answer that's going to take care of things forever. And the world doesn't work that way. Today was isolated as far as the stock market is concerned to just Israel and Hamas. Take today for itself. The market didn't go crazy. It didn't go up real high. It didn't go down real high. Again, it started down low, kind of dealt with the issues, realized that it's, at the moment it's not going anywhere. We've got it covered. That's a good thing. Take today only. Understand that tomorrow may be different. We might wake up tomorrow and we find out that this has escalated to a bigger issue. And if it has escalated, it's going to have bigger effects. It's going to affect oil. It's going to affect natural gas. It's going to affect other supply chain issues. And if it does that, it's going to bleed out into global markets. It's going to bleed out to the American market. It's just the way that our world is today. It's not in a vacuum. If things continue to stay the way that they are, he's right. The macro is going to take over. The macro is going to look at this and go, we have one more thing to hold down inflation, one more thing for the market to worry about, one more thing to add on top of what the Fed's already done. Again, making sure that interest rates are continuing to stay where they're at or close to where they're at. That's going to push on the markets. CPI comes out Thursday. We've got PPI coming out. Assuming those are continuing to go in the right direction, I think we're getting everything that the Fed's going to need to know that they probably don't need to raise anymore. Now, does that mean they're going to start turning around? No. Again, take things as they come. Don't start gleaning into this that the end of everything is spectacular or it's all doom and gloom. Just take one day at a time, take one crisis, so to speak, at a time, and understand that we will get through this one section, one day. I don't know if you've ever seen the movie Creed, but it's one step, one punch, one round at a time. That's kind of where we're at right now. And don't get ahead of yourself. Don't try to jump into things and make big swings at this stuff, because at this point, it's not going to probably help you. It's just like this morning. If you sold everything because you thought the world was ending, you sold at the bottom and the market turned around. Again, that doesn't mean anything about tomorrow. This means today. So what I'm trying to get you to focus on is focus on your long-term objectives and make sure that your portfolio is set up to reach your long-term goals. The other thing that's going to probably happen with this is there might be a flight to safety. And one of the things that's been safe out there is large tech. This is not going to have a major effect on large tech. It's not going to affect Apple. It's not going to affect Microsoft. It's not going to affect Google. It shouldn't anyway. And I'm not saying that the markets don't sell it off. I'm saying in general, what does any of this have to do with large tech? Nothing. And you've got some big companies that have a lot of cash, that are generating a lot of cash flow. That's a flight to safety, and it has been for the last several years. So I don't see anything changing unless something does change, but I can't imagine what that would be at this point. So what we are hoping for was a larger broadening of what has gone on with the 7 big stocks this year. That may not occur yet because of what we have going on, but I don't see anything here being a major negative, barring some escalation. So that's just my 2 cents worth. Dickie out.